big welcome to Scott Simpkin from Seedrs, who's with us today. I know that many of you know something about Seedrs. I know that some of you have questions about Seedrs, but I know that Scott knows more than any of us. So it's great to have him with us. He's going to explain a lot. He's going to change our lives, our world, our consciousness, and everything. Scott has told me that when you come onto this call as a normal person, you will leave as a superhuman. I don't want to put any pressure on you. It's great to have you with us, Scott. Please tell us everything you know. Let us go forward in a superhuman way after the end of your brief presentation. Great to have you with us, mate. And over to you, if that's all right.
Yeah, sure. Well, what a wonderful intro, but I'm worried that that's just going to lead to full-on disappointment now, because I'm not sure I'm going to leave all superhuman. But anyway, I did just quickly before I share, in fact, while I'm sharing my screen to ensure that that's okay. Everyone can see this, right?
Great, thanks.
Yes.
So, hang on one sec. Let me just get the slideshow up. I'm a terrible multitasker.
Top right hand corner share. Is it presents it?
Hang on. Yeah, there we go. Sorry, it's been covered by the Zoom thing. That's why. Right. So, yeah, just to introduce myself, I'm Scott. I'm the manager of the UK campaigns team at Seedrs, which means that I'm in the team that deals with most of the, well, no, not most of, all of the new business that we do in the UK. So anyone that wants to crowdfund comes across me in some shape or form on Seedrs, albeit, you know, maybe some of my colleagues with a little bit of my support. I've been doing this for nearly 5 years now, which is a bit daunting, but it makes me a little bit of a boffin in the space, so I can give you every last detail. And when I chatted with Ollie about this presentation, I was pretty clear. I really enjoy it when it's a bit more interactive. So if anybody has any questions that they just fly in on, you know, please do. Please just unmute yourself and say something, because it's much better when I'm not preaching at people for 20, 30 minutes. What I'm going to do, though, so at least you know when to fly in, is I'm going to talk quickly firstly about who we are, and then I'm going to go quite heavy on the how to do it properly and how to crowdfund and how to get ready to crowdfund. That's going to be the vast majority of the presentation. And the last bit, we've actually just this week released a really interesting new private deal room aspect of the platform. And I think actually showing this to you on the website with my wonderful investor access is probably the best way to describe that. So I'm gonna give you a little quick demo of the new stuff that we've got going on that might be helpful to all of you at the end. But like I said, at any point that you feel it's relevant, please just do jump in. I'll get going. Cool. Right. So what do we do at Seedrs? We kind of live to give wider access to capital with life cycle support growth, which is basically we want to support you beyond just your fundraising round now. And we have an industry leading success rate. So we want to make sure that everybody who comes on Seedrs has a really good chance of success. And that has meant that so far we've actually funded over £1.4 billion. This is over 10 years into, oh, there we go, over 1,455 businesses. Or should I say 1,455 fundraising rounds. Some businesses have done 10 plus with us. So it's not 1,455 different businesses. These are businesses raising money and doing so, you know, maybe 4 or 5 times on average, I'd say, for the ones that do come back. Right. This is, I think, the biggest stat that absolutely kind of stumps everyone is that right now, and this is that actually, I think this is more up to date. This is even bigger than this. 1 in 3 businesses at seed stage, so this is pre-institutional rounds, choose crowdfunding as their way of raising money. I think that from latest data, this is Bowhurst's. Bowhurst is one of the best data providers of startup fundraising in the UK. Their most recent data that I've seen might indicate it's more like 40% now. So it's going up quite fast. There are a few reasons for that. I'll go into it, but I think one thing I alluded to the fact that I've been working at Seedrs for nearly 5 years now. When I started, it was really, crowdfunding was really a thing that you had to convince people was okay. It was almost like a thing where it was like, oh yeah, you know, you don't crowdfund if you're absolutely desperate for money and you can't find it anywhere else. You know, actually crowdfunding has its benefits, like marketing to your community and allowing people who are maybe less well off to participate in your fundraising round, and pooling everything into one place and accessing loads of new investors, that kind of stuff. You know, I really had to go hard on that now. I think most people get it now, and I think that stat proves it. This is the reason why. So I'm going to take you all back to 2008 now, because that's when Seedrs started out of a recession. It's where most good stuff happens after a recession anyway. So, you know, what happened was access to capital after the financial crisis became really hard, because banks were a little less likely to lend and take risky lending decisions for obvious reasons. They've been burned by that in the property market. So they weren't about to start doing it for lots of startup businesses. And then I think startups have become more popular. One of the things that I think everyone leaves out is in the last kind of 10, 15 years, you know, because of the technological revolution that we're seeing in all of our lives, it's become pretty, you know, yeah, Google, Microsoft, Facebook, you know, that kind of lot can, you know, cater for a lot of part of our lives. But Facebook was founded in 2003-4, and you know, there's plenty of companies now that are bringing up the technological revolution that mean that, you know, you don't have to be a big corporate to be able to compete. And I think a lot of people have realized this with the creation of new technology generally. And yeah, it's proved there's been a boom certainly in the last 10 years in the UK. But still, despite that, only 1% of founders raise money through venture capital. And venture capital is the alternative to banks in 2008. You either did venture capital or banks, or third option, you knew lots of rich people and you could convince them to invest in startups, even though they didn't really do that because maybe, you know, they unconditionally loved you, like, you know, I don't know, a rich uncle or something, rather than sophisticated angels who, you know, knew what they were doing. And those sophisticated angels tended to be exit founders who had more money than sense, and, you know, were able to just, you know, raise wherever they wanted to. But again, it was a network thing. So there is and was a big problem. Sorry, someone want to...
Excuse me. Yes. Hi, this is Louis speaking. Quick question: was back then already the EIS scheme in place?
Yeah, so the EIS scheme was brought in like 2011, 12. Actually, it's funny. I'll leave my political opinions at the door here, but one thing David Cameron's government did do amazingly well was boost the startup ecosystem in London. The Silicon Roundabout project, you know, getting loads of startups to Wall Street, introducing the EIS, which has absolutely been transformative to people's risk profiles with investing in startups. One of the better government schemes and small stage businesses that we've seen in the last 10 years. And that has absolutely helped people outside of venture capital get into startup investing, and businesses attract investment afterwards.
And you would say even for crowdfunding?
Oh yeah, so pretty much every business that is crowdfunding on Seedrs is eligible for EIS, and when they crowdfund, they're still eligible for EIS. So even if I'm buying a £10 share in a business, I still get the 30% EIS tax relief. I could ask the tax man for £3 back, you know, my next tax return if I wanted. I'm not sure how many people bother at that stage, but still, it is eligible for people even investing at the smallest amounts. Cool.
Thanks.
Here are a few of the businesses we've raised for. You might recognize a couple of names here. I think the ones I will point out, I think a lot of people that like wine and champagne know Chapel Down. Revolut is the UK's largest startup in terms of valuation at the moment. It's valued at 33 billion, which I think is pretty cool. Seedrs investors actually invested at 200, 300 million back in 2017. I don't know if any of you were lucky enough to get in on that, but that's one of the golden tickets that we've ever put on the platform, I think. And then All Plants is pretty big at the moment. They've just raised an enormous round. This is doing amazing things. You might notice AFC Wimbledon on the right. We've actually crowdfunded for football clubs as well. Quite a cool way to get their fans as part of owning the club. And AFC Wimbledon are obviously well on that on that bandwagon, and they have been since their formation. We raised 3 million for them 2 years ago, which is pretty cool. Oddbox are another 100 million plus business now, doing amazingly well. But yeah, you might recognize a few names there.
And Scott, would you say that the popularity of a football club has contributed largely to the success of a crowdfunding campaign?
So AFC Wimbledon is still our largest campaign in terms of investor numbers. That should answer your question directly, which is, football clubs have fans. Fans want to be a part of something. And I think that's a cross-reference with businesses. Businesses have fans too, but football clubs have fans. That's the next level. And it was pretty easy to kind of get as many of them involved as possible because, how much they care about their football club. And I think it's a really good example to show what can happen when you've got, fans and people that care about what you're doing.
Scott, how much work have you done with Anna Money?
So we did one round for them. They've actually exited now. They sold, I can't remember who they sold to, but we did a round for them 2 years ago. It was pretty successful. I think it was maybe 1 to 2 million. And they have now exited to somebody in the fintech space that is well known that I should know the answer to. But yeah, they've been acquired. You know them? Oh, I don't know if I cut out there, but
yeah, you're back. You're back.
I'm back. I was just asking if you know them.
Do you know what? That's why I asked. We've done some strategic work and some ecosystem work for Anna Money, and they sold out a share of their business to the Bank of Amsterdam. So yeah, I was quite interested because I wasn't aware of this, but
that might be part of the transaction. I hesitate to say that I'm not super on top of that, but all I know is it happened.
Anyway, that's really interesting. Thank you.
Right, now on the juicy stuff, how to crowdfund well. This is the stuff that hopefully I can give you that is not, readily publicly available information. So for me, this is the most important slide to look at if you're thinking about crowdfunding with how to do it. Because everyone has preconceptions of what a crowdfundable business is. A lot of people say, oh, you need to be a B2C business. That's one of the big things I hear. Not true. The actual answer is you need 1 + 2 + 3 to equal 100% your target. I'll go through what each of those mean. 1 is private network. That is, do you have people that you know personally that are able to invest in your business and want to back you? And that doesn't have to be people that are, 30, 40, 50 grand investors. These can be people that are 500 quid, 1,000 pound investors. They all count. They're all able to invest via the platform. But these are people that you know face to face personally. Then second is the business community. And that is people you don't know face to face personally. I think that's the key one, but they know your business. So typically that will be social media followers, or a mailing list, or increasingly LinkedIn, although people don't like to admit that because you often don't know all your connections in person, but just communities that you could continue to post to get them interested in your fundraise. And the last one is Seedrs investors. So we have loads of investors on our platform that are interested in investing in early stage investment opportunities. And you are essentially pitching to them as well. And if, the amount you're going to get from private network, plus the amount you're going to get from the business community, plus the amount you're going to get from Seedrs investors adds up to your target, then you can crowdfund. And to give you the whole idea of B2B businesses versus B2C, typically the reason why people say B2B businesses shouldn't raise on crowdfunding is because they're actually not very good at part 2, business community. Yeah, obviously, because their customers are businesses. Businesses don't really invest in other businesses. So, if you have a good private network and it's an idea that's really going to grab the attention of Seedrs investors, then you can still crowdfund very effectively. And actually some of our most successful rounds have been B2B businesses. I saw on the, the previous slide, we have Perkbox, that's a B2B business. There's a company called Hectare that is basically eBay for farmers. That's one of my favorites because, the farmers you can't imagine investing in. But our crowd absolutely love it because it's one of those technologies that's just so obvious, makes life easier for the people that are in that marketplace. and it's doing very well, and our investors are absolutely massive fans of that business, means that, you know, we have a really good opportunity to raise for them, even though they're not going to do very well at part 2.
What if the business is B2B and B2C?
Perfect. You should have access to the community, albeit, you know, maybe not as larger access elsewhere. But yeah, we get plenty of B2B to C to business, B2B to C businesses. I think the key question you need to ask yourself in that case is, do I actually have access to my customer? I'll give you a prime example because I think this is a really good one. Let's say, you know, I do a lot of FMCG raises. So these are, you know, chocolate bars and stuff like that you see at the supermarket. If I'm, you know, raising for a chocolate bar company, then and they're, you know, in Asda, Sainsbury's, wherever, you know, most of their customers pick them off the shelves in Sainsbury's. They might buy one every day, and the business has no idea how to contact them. Why? Because they're buying it at Sainsbury's and Asda, and the business has no idea. They just see it as a number that they get from sales from that business. You know, that is the same problem as B2B to C businesses have. If you don't have access and visibility to your end consumer, then you're probably not going to do very well at part 2, and you need to make up for it. And that's not to say you can't. That's the key message I'm giving here. Like, you just need, you know, a very good pitch that's in the right stage of investment opportunity, or a good private network and willingness to go out to your own personal network and get them all involved. Those things help, but that gives you a good idea of some of the challenges that some businesses face with their community.
Scott, Danielle has a question.
Yeah. Oh yes, hand up. Saw that.
Just being all polite in the background there. Thanks, Scott. Can you tell us what the average percentage split is for?
Yeah, this is the golden ticket question. I really, honestly, I don't want to be a politician here and give you this wishy-washy answer, but it actually is a wishy-washy answer. I've seen some businesses that have done 90% private network, 10% Seedrs investors, 0% community. I've seen some businesses that have done 90% community. For example, the Revolut fundraise never even got to Seedrs investors at the end because it was all community and all of their community put money in. That's becoming very popular with the larger businesses. And then Seedrs investors, I mean, this one's toughest because one thing I will reveal to you, which I think is really important, is you as founders have the most control over the number 1 and the least control over number 3. Why? Because number 1, know who you are personally, which is a really important part of investing. Number 2, already know what your business is. So they don't need education on what your business is. They might not know who you are. So maybe less good as number 1. And number 3, Seedrs investors, they don't know who your business is or who you are. So that one, it's very much is the pitch grabbing them, and it's less within your remit. So one of the pieces of advice I'll give you to try and help answer your question is try and think of it like that. You have the most control over part 1, least control over part 3. If you're relying very heavily on part 3, then, you know, that's tough. I would try and big up part 1 and 2 a little bit more in order to get going, because our investors tend to need a bit of momentum and validation as well.
And what's, I mean, but if you're planning something like this out, what sort of, you know, what's a realistic percentage to rely on Seedrs for? So
again, it depends slightly on the kind of business you are. So B2B, B2C, it makes, and then it depends also slightly on, are you doing something really topical? Like, I don't know, this is obviously ridiculous, but a vegan cryptocurrency CBD platform, you know, like all the buzzwords and people.
You stole my idea.
Funny you should say that. Yeah, funny you should say that. Yeah. Yeah.
You know, that kind of stuff that we know all our investors care about, obviously going to do better than, say, a very, very complicated cybersecurity business, which people are going to care less about because they don't really know what that is, and it's a bit more of a barrier to learn about it. So again, not giving you a very clear answer here, but that's the key feature. Like, what kind of business are you? It's our job to work out what works there. But I think the easy start point is, are you in a very good investment position in a topical space? If the answer is yes, you probably need less from the private network and business community than you do if you are not in that space. I would say, you know, at the low end, 30%, at the high end, maybe 70, 80% from the first 2.
And sorry, and so many questions, but do you release information about the Seedrs investor network in terms of their interests and what they're, you know, like you mentioned crypto, vegan, blah, blah, blah. So these are clearly words that people are being driven towards, like investing?
So we have, I can tell you our most popular sectors. So we're you know, our most popular sector in terms of amount invested is fintech, and it still is.
Yeah.
A very close second is food and bev.
Yeah.
That's very broad, but you know, that fits in with the, and by the way, 80% of those food and bev businesses are vegan businesses that are doing really interesting stuff that is topical. So that probably gives you a clue.
Yeah.
Third is SaaS, so software. Again, if it's something that's easily understandable. But what's interesting about SaaS is a lot of those businesses are B2B because they have to be. So that is really interesting. We're also pretty good at prop tech and travel and leisure. I would say the ones that are least topical are things like cybersecurity, I mentioned earlier, recruitment and procurement. Everyone seems to have a bit of a dull opinion of recruiters, I guess. So they don't want to invest in those businesses. Sorry if anyone's in that space here, but that gives you an idea of, like, you know, where we would look. If I get a recruitment business, I'm treating it very differently than if I see a fintech. Let's put it that way.
Amazing. Thank you so much. So helpful. Yeah.
Scott,
can I just pick up on?
And oh, sorry, Scott. We've got Sharam and Scott with a question.
Thanks, Gary. I wanted to just dive into the SaaS question a little bit. I mean, it's not doesn't need a long answer. It was more just you know, working in PR with a lot of like startups. You know, tech SaaS is like notoriously the hardest one to get people excited by, particularly journalists. And there's just the sort of like the strap line for it is, you know, SaaS just isn't sexy. So what is it that about SaaS that is attracting so much attention on Seedrs, and why are people buying into it? What are you guys doing just, you know, have you got any insight into why it's successful?
I agree with you on that point. I totally agree with you. I think the honest answer to that question is most VCs and institutions, you'll be amazed by how much money is going into software businesses in the UK right now if you looked at the data. The reason for that is the exit multiples are so high, and most sophisticated investors understand that and understand that the software businesses are the most scalable businesses that we've got on our platform, and are therefore the most likely to give them moonshot returns. You know, we're talking 1000x plus because software is so easily scalable. So I think honestly that's being driven by our more sophisticated investors understanding that software is hot as a business topic right now because it's so scalable and more likely to offer extraordinary returns. You know, I'll juxtapose that with, you know, my chocolate bar again. You know, if it was a vegan chocolate bar, that's great, but you know, it's hardly going to take over the world and give you an 1000x return. And I think some investors are looking for the, you know, next Facebook, Airbnb, Uber investment, and not so much the, you know, this might make me 5x if it does well, even though that's a good return.
Great, thank you.
Sharam, I'll come to you because you've been waiting patiently for a while.
Thanks, Scott. Two quick questions. The private network and the business community raise that we do prior to come to Seedrs, is that out of your platform or is it inside your platform? And if it's inside your platform, do we charge you or do we pay your fees on those?
Yeah, so a bit of both is the honest answer. I think it all depends on whether you feel you need the platform to do it. So I'll give you an example.
If I don't, so if I've raised the money already outside,
if you've raised
percentage.
Yeah, if you've raised the money already and you've transacted on it, then you know we actually do charge as a percentage of the whole round, but we're reasonable. That's you know, we've done nothing to earn that money or help you with that, so we won't charge you on it in the vast majority of cases. Well, in fact, I'll go as far as saying every case, if that's the key point, you've got the money in. So if you got the money in, no, we don't charge. But I think I do want to layer in, you know, if you're doing this properly, you're probably going to need the platform in some shape or form to put some of the money in, because you're going to have investors that don't want to invest more than, say, 25 grand, which is really what we say the minimum ticket should be for a direct investment. You want to use our nominee, which is the legal entity that holds all of the investors under one name that you don't have to deal with personally. Really important to ensure that you put as much in under that as possible for your own administrative sanity. So there's stuff like that that we say, you know, every business, even if they have money that they brought to us, might want to use as part of the crowdfund as well.
Yeah, cool, thanks.
Right, then one more now, which is, has anyone else got any questions?
Raj, is it related to this section, or can you ask it afterwards?
Oh, we're on mute.
You're on mute.
Sorry, I was having a team meeting with myself. Sorry about that. All right. So, Scott, what should be maximum ticket size when you are considering a crowdfunding?
Sure. So, maximum ticket size. What is in like the? Hang on. Are we talking from an investor or a business perspective?
No, as a whole, as a campaign itself.
Okay, so the maximum amount you're looking for as a business, as a target. Okay. We've done, some businesses have raised, so the actual answer to this is the cap of the European Commission is 8 million euros. So you can't raise more than that through crowdfunding. The reality is, I think, you need to be very realistic about what you're achieving as a business. And a key point I want to layer in here is your target really should be like, most businesses that are doing this well will walk away if they funded 100%, slightly disappointed, because actually they want to overfund a little bit and they want to go a little bit further above it. And the target is just a fantastic way to make something reachable so that you can, get on the rocket ship afterwards and continue pushing towards a higher target later on. So yeah, that hopefully gives you an answer to a degree, which is no more than 8 million, but I would consider probably what's the minimum amount that your business needs to achieve its next step. Put that as your target and try and overfund from that point.
Okay.
Cool. Right, I'll move on. Actually, what's cool here is I covered a bit of the stuff I've done in the previous presentation, which I will now glaze over if I've already covered it. So yeah, private network. I'll repeat this because it's really important. This is basically just friends, family, professional network. I put LinkedIn, but I think that's more community now. Friends of the business, events, and moonshot investors. Moonshot investors, by the way, just in case anyone doesn't know what that is like I have a friend of a friend that knows, I don't know, Elon Musk. He might invest, it's just a good way to kind of, get in contact with those people because you got an excuse now too, whereas previously you probably didn't. So building your community with capital. I'm going to give a few examples of how people have done this really well. So social media following, going by vegan chocolate bar. Let's say like organic, like no nasties chocolate. This is a company called Olivia's I did a raise for about this time last year. And Olivia, who's the founder, is one of those Instagram personalities that she's so good at communicating with her community of followers and people that order Olivia's stuff online. Don't know if any of you follow her. I actually appeared on, I think it was her Instagram story, telling people what equity was, which was one of my career highlights. But she's got loads of people that love what she does, love the business, and wanted to find out a little bit more about what investing in her meant. And it was really cool to be a part of that. And she was amazing at really basically explaining to her community what this was and why they should get involved. And her campaign did way better than we all expected. She actually raised 1.9 million with us. And we were originally talking about 1.2. So she did an amazing job. Email newsletter. I've included this on, I don't know if any of you have seen any of their marketing. It's pretty awesome. They're very good at doing, I think they put the picture of their organic, this is really cool. They put a picture of their like vegan bacon as the Wikipedia photo for bacon, like real bacon. And they were just like, they did this whole campaign about it. It was like, how long are people going to not notice and stuff like that. They're just fantastic at communicating with their community and doing like tongue-in-cheek stuff that's different. And their newsletter, it's just followed by all these fans that love what they're doing and was highly successful picking up investment. They raised 4 million in under 48 hours. Just so good. You very rarely get a campaign along that, let alone a food and bev one. And then last is loyalty schemes and rewards. You can do this very effectively with your community as well through a campaign. By enticing them to invest by saying, they're going to get money off or special perks that you would otherwise never give. So Urban Massage, for example, I think every investor has a certain percentage off every massage they ever get and early access to like new services and stuff like that. That I know they communicate very regularly with their investors to talk about, what things they should develop, how they should run their business, which I think is absolutely one of the things that you should do as a crowdfunding campaign with anyone, because it's just such a fantastic way to get access to people that you know care about your business and your product. And of course, you incentivize them with those loyalty schemes in the first place. I'm sure a lot of those investors got interested in becoming investors in Urban Massage because they were like, right, yeah, I quite fancy 33% off my bi-weekly massage. I'm going to go for that. So yeah, that's something else to think about. And then the last one, I covered this slightly, but so I'll glaze over a little bit, which is appealing to the Seedrs investor. So how do you appeal to the Seedrs investor? We talked about topical stuff, but I'll just kind of put it into three parts: head, heart, and the excitement, or like I sometimes call it, the little kid inside of you. So you have to appeal to the head. That means, you know, this has to be a good time to fundraise. You have to be logically spending the money in a way that's going to help the investor understand they make money. It's got to be part of a trend sector, something that they think is going to grow in a market that they think is going to grow. The fundamentals do need to be good, but the heart is really important as well. You know, this is one of my big things I say to founders. Can you, if you're, you know, investors, when they invest in a startup, know it's quite likely they're going to lose all of their money in this. That is a high possibility. So, you know, can you say to investors, you know, invest in me because of my story and what I'm building in a way that if you did lose all of your money, people would go like, oh, that's okay. You know, at least I backed something I believed in. At least I put my money where my mouth was, and I backed a climate change business that was helping, you know, tackle the climate crisis, or, you know, a business doing really good things for a certain sector of the population that needs a little bit of help, that kind of thing. But any business can do this. It's all about creating a good story that gives you a kind of leg up and communicates your mission and what you're trying to achieve beyond just profit to your community. And yeah, I've seen fantastic campaigns that have really done this very well. And the last one is, you know, excitement or the little kid inside of you. Every person on Seedrs wants to know that it's possible that they're investing in an early Uber or Airbnb or something that will literally give them a life-changing amount of money at the end of it. You know, what's not going to excite a business? You know, I'm opening a bakery and I want to pay you dividends over 5 years, and I might open one more bakery, but, you know, quite like this one, let's keep it as it is. That's not exciting. You know, to build this, I'm opening a bakery, I want to be bigger than Greg's. Yeah, right. You've got to communicate logically how you're going to become bigger than Greg's, of course. But if you are, that's fantastic. Like, that is what's going to excite investors. Investors want to know that you've got the ambition that's going to lead them to, you know, very, very successful, but making a very successful investment, not just a little investment that makes little sense. So what I would say is just make sure that your pitch, regardless of whether you're crowdfunding or not, fits these three categories in the story that you're telling. Really important in your pitch deck that you touch on those three things, because it's true of Seedrs investors, but it is also true of, I think, any investor. Right, now I'm going to go into the demo, which is just showing you a few cool things that have recently happened that gives you Seedrs thing. Before I do that, we got any quick questions? I might move back to this just in case. Oh yeah, we got one.
Yes. Yeah, so actually I've got loads, but I'm trying to try and keep it down. My first question is, when you measure success, so first of all, from the business's perspective, like, what beyond the raise, do you have any metrics for business success rate through Seedrs?
Okay, sorry, just so I can clarify what that question is that what a successful raise is, or what a business that is successful is, i.e. going to make money for investors? The latter.
Yeah, so and that's actually, that was part of, so I think you've answered my question there as well, because I'm interested in what I guess it was like, what the metric is of business success. What does success look like as a business, and are you measuring that as Seedrs, and are you, and what, you know, what does that sort of
this is an interesting point, and I find this actually academically quite interesting. It's very hard to measure how well a startup is doing, actually, in many ways, because even if they are, you know, they've done a year and they've, you know, 50%ed their bottom line. You know, how good is that in comparison to the market? Have they just done that because, you know, everyone's become interested in the broader market and actually their competitors are massively outstripping them? The way we actually measure success, and this is, you know, does have its faults, but it's a hard one, is value of the business based on their last valuation that they achieved. So the idea is, let's say you, I don't know, you raise money at £1 million valuation now, and next year you raise money again and you're worth 3 million. That'd be seen as pretty good. You 3x the business valuation in a year, and you might have only, I don't know, 25% of your profits, but you might have also built a new product or a new line that is has high potential and puts you in a really nice position. So we think that encompasses that very well. But then there is a small other problem where, you know, let's say a business does so well, they don't even need to raise any more money. Then they're technically valued at the same, even though, you know, they might be doing a lot better. So that's tough, but we measure, you know, success for investors based on valuation uplifts. And we're not here to make judgments on, you know, what's good and what's bad related to the business. And actually every investor has a portfolio that shows their IRR in the same way as you would do for an ISA or a, you know, stockbroking account. It shows how much the value of your shares have increased based on the last market round, which is a good indicator for investors of how well their investments are doing.
Awesome, thank you. And do you have any so like impact measure either? Like if valuation is purely monetary, not based on, so like you mentioned there, like if an investor invests in something and they say, at least I got, you know, okay, I might have lost my money, but at least I backed something good. Do you have any intentions to bring in any sort of measure around impact as opposed to just revenue, or?
Okay, I'll answer this in two separate ways, I think, because just to clarify the first one, which is slightly repeating what I've said, is yeah, if you are making significant impact in your business that is likely to make the business more valuable, your value is likely to still also go up.
Okay.
So that's the key part. Impact, as broader point, is something that we're becoming very interested in as a company, regarding things like backing, you know, female founders that are horrendously underfunded in the current market. We just had a business for 8 years called, we had an event last night actually, or sorry, 2 nights ago, called Black in Business for Black founders, because again, they're also horrendously underfunded. So there's a lot of stuff we're trying to do to ensure that we are backing businesses for, you know, the underdog entrepreneurs that maybe have an unfair disadvantage, that we want to turn around. And I'm pleased to say we're actually probably the best funder of female founders in the country at the moment, albeit it's still only about 27%, which is still not very good, but better than VCs. So that's all right at the moment. But still, it's those kind of impact measures are super important as well. And we're becoming more aware of that, certainly in the last kind of 3-4 years.
Cool, thank you very much.
Scott, I would have a question.
Yeah, sure.
So how much do you think it contributes to be more or less successful when you set a valuation for the business? So would Seedrs investors be making a conclusion whether or not to invest based on the value of the business at the start point of the campaign?
Yeah, so okay, so there's 2 things here. Firstly, the valuation is becoming way more important in crowdfunding. I have this little joke, which I don't think is too far from the truth, where when I started, you know, 2015 to 2017, there were like, I don't know, 50 breweries a year raising money through crowdfunding at, frankly, insane valuations that none of them have lived up to, apart from maybe Brewdog. But even then, insane valuations that are crazy, and investors have lost a lot of money in a lot of those because maybe they didn't quite understand, you know, what a good valuation is. Now on Seedrs, valuation is one of the most important aspects of ensuring that you get investors. I know for sure. I've seen businesses that are valued well, that I think, based on the current market, that have done very well with our investors, and businesses that I know are hitting a slightly punchier valuation that have done less well. In terms of success metric, which is the second part of this question, that it depends on your sector. But for me, you know, if you're 2xing your valuation every year, then you're doing a good job as a founder. And I think that's a good benchmark to continuing at. most businesses raise money for 12 to 18 months, will start raising money once a year in order to continue their scale and growth. And for each one of those, if you're 2xing your valuation, you're doing well. So that, I think, is my and investors like that as well. So that I think is my 2 cents there. But some of the better businesses are 4 or 5xing their valuation each time, and that makes investors very excited. So something to bear in mind, and also a reason why you shouldn't overvalue your business again, because if you do that, you're just setting the bar even higher for you for the next round. This is something everyone forgets. If you say, I might raise at 2 million, but I could get away with 5, and you raise at 5, then your round after that has to be 10 million, not 4 million, and you might have to justify that a bit better. So you are really digging yourself a hole sometimes by overvaluing your business early. One of the key things I tell entrepreneurs is just know the risks your investors are taking and reward them justly for them, because you will not regret it further down the line when you need a little bit more money. Although you might regret it a bit more at exit in your huge IPO, but I'd say you're less likely to get there if you're trying to justify much larger valuations.
I think what I mean, like, if I'm looking for different businesses on the platform, and I see a business that has a valuation of, say, 50 million, then would I just scroll into the next business, say this is just too high? Is there a magical number where you say, look, most of the businesses are valued somewhere this number, and that's what people are sensitive to. And if you're going beyond that, they're not even looking at further content.
Yeah, I understand that. I think, look, if a business is valued at 50 million, it's probably because it's very well established and it's less likely to fail. So this as an investor is the decision you've got to make. Is you're right, a 50 million value business, unless it's a Revolut style fintech, is unlikely to make you 1000x because you're in too late. But it is also less likely to fail because it's gone further than, say, a business valued at 1 million, that if it gets up to 50 million, you've increased it by 50x. So I'd say that's totally down to investor preference and your risk profile. But yeah, if you want to invest in businesses that are likely to go 1000x, which a lot of investors are looking for, then I'd say you probably need to be getting in earlier than that. But that's totally down to your preference as an investor.
So it's more about showing the gross potential, and not so much about the valuation at the start, but demonstrating that this valuation can still lead to a 1000x.
Yeah, you're absolutely right. But the growth potential needs to match to the valuation that you're likely to achieve on acquisition or IPO. Again, to make my point a bit further, Revolut are very good at convincing people that everyone in the world can have a Revolut card. Let's talk about my vegan chocolate bar again. Yeah, fine, you might get the distribution that Coke get for Coca-Cola, just so unlikely. And that's what you're probably going to need to achieve the kind of same scale as Revolut can. So that is a definite question you should be asking when investing in businesses, is like, how high can it actually go to exit potential? And that's entirely based on the product of the business.
Okay, thank you.
Cool. And we got